Hey, good morning, everyone. Happy Friday the 13th. Spooky season is upon us here. We're mid-October. Just what good timing, right? October 13th is Friday. October, spooky, blah, blah. Anyways, got sick. That's what's going on here today. So let's make it kind of short and sweet. Break down what we got in terms of the market movement. We'll break down some of the news events because we got earnings kicking off today. Now, the thing is, I haven't really looked at these earnings, honestly. I know JP Morgan, some banks are reporting today. Da-da-da-da-da. Let me just open up the JP chart. Maybe something I showed on a bit earlier. Let's see here. JP Morgan's up. It's gapped up here. I don't really know what the... Anyway, so Q3 earnings... Q3 earnings are kicking off today, right? Main Q3 earnings, as some of the banks are reporting. We're generally starting with that sector, right? The sector is dealing with elevated interest rates, muted capital market activity as well. JP Morgan, Wells Fargo were the first to report, with both banks notching a quarter earnings beat, right? Citigroup has also stayed to report its results today. Bank of America, Goldman Sachs are going to report on Tuesday. Morgan Stanley is out on Wednesday. So Morgan Stanley analyst Betsy Grassick noted that investors have been more optimistic about banks since the latest industry conference and that raises the bar for bank earnings, which lenders will not likely clear, right? We expect net interest margins to be under pressure for longer and some of the expense flex until at least January, and weak loan growth. So Goldman Sachs, Richard Rams then also talked about this, said three headwinds will be in focus: the net interest income trajectory for 2024, the impact of the Basel III endgame, and the potential downside from the credit and reserve increases. So credit events, right? A lot of people are talking about that based on what we've seen in terms of the most recent, right, the yields, right? The 10-year yields continuously pushing up. Let me just see what the 10-year is at right now. We got a pop in the 10 years yesterday. The 10-year yields yesterday, as we're kind of slumping right now, with some kind of upside pressure in the market. We are probably close to the top out in the 10 years. I think that we probably get close to 5%, if not 5%, before we start dropping pretty aggressively in yields, and that could come in the next few weeks overall. So we'll see how all these earnings come out, right? We have JP Morgan reported today. Who else? Wells Fargo. Citigroup is up as well, gapping up here. Wells Fargo is gapping up aggressively as well. A lot of these banks are putting in a nice little gap to start the session here off of these earnings, realistically. So we also had net charge-offs are expected to be another weak spot as delinquency returns to higher and normal levels after rates have climbed steeply naturally over the past year. The four biggest U.S. Banks are expected to see their net charge-offs, the amount that they write down for bad debt, actually jumped to $5.3 billion in Q3. That's the highest for JP Morgan, Citigroup, Wells Fargo, and Bank of America combined since Q2 of 2020, right? So we also saw that CPI was running pretty hot, which put some upside pressure on these rates and these yields, putting some downside pressure in the overall market. Yesterday, we saw markets slump, especially into the end of the day. So retail inflation slowed again in September from the prior month, but it also came in hotter than expected as rental costs surged, accounting for more than half the increase. Growth in the consumer price index slowed to 0.4% month over month from a 0.6% in August. The core CPI, which excludes food and energy, stayed steady at 0.3% month over month, as expected and as prior. And the latest data pushed stock markets a little lower while treasury yields rose. And we see that the data indicated that the rate hikes are by large over, theoretically, say a lot of analysts, and we've seen that in the expectancy percent, the chance of rate hikes into the end of the year is still staying very low. We have big tech earnings coming out starting next week and into November, right? We're reporting with Google, I believe, first. Microsoft is there. And then the week after, we got like Apple and whatnot. So there's going to be, I think a lot of eyes are on that because tech is still looking a little fragile with inflation higher. But so far holding extremely well. The rug pull in the downside on tech is really running out of time. We have like a few more weeks, I think, maybe 1 to 2 more weeks before we could expect these lows. A lot of people are bullish into the end of the year, but at the same time, there are instances where we could see prices drop into OPEX, right? Options expiry, because a lot of people are hedged. A lot of market makers and large money is hedged to the upside. So we could see a little pull before we start that rally realistically. That'd be great, right? Dip buying opportunity. But a lot of people have been buying, excuse me, geez. A lot of people were buying these dips on tech, which were very shallow realistically. We're at the top of a current channel in tech, right? Tech has been holding out a lot better, but it's also being sustained by 7 general names. As we talk about tech, right, let's talk a bit about AI. Some news came out as chips exports controls are being finalized in the US. Washington is considering ways to close a loophole that gives China companies access to American AI chips through units abroad. So the Biden administration has been cracking down on chip exports to China with updated rules expected as soon as next month. It is also looking at closing the loophole that allows China and Chinese parties to access the US. Cloud providers like Amazon Web Services, NVIDIA, and AMD are two of the most notable semiconductor. SML has also been on the crosshairs. However, as you guys have seen, NVIDIA and AMD haven't necessarily been nosediving, right? As you guys have seen, NVIDIA and AMD haven't necessarily been nosediving, right? They've been holding out very well, and AMD has actually come into a very opportunistic swing to the upside, right? Especially after we pulled back into that $100 level right now, trying to break out this channel to the upside. Any movement above 1112 on AMD, I think we can really spark this upside movement. There's a large distribution ledge there that's holding out as resistance. Now onto the markets, right? Yesterday, the S&P 500 futures at about 2 p.m. or so had a significant drop to the downside, which fell from 44.16s, let's call them, all the way down to 43.55 before we caught a bid. And right now, we're catching a bid here pre-market as expected, because we caught a bid into the close of the session yesterday, and that was pretty bullish overall. It kind of broke down the how do you call it? It broke down the sell side momentum that came out earlier, or later in the day, right? The fact that we rallied and we closed around 80, taking away about 30, 25 points of that downside wasn't the best case for the bears. Right now, overnight, we've pretty much completed and cleared the auction that was low volume into the bottom block yesterday. So now that auction's complete, right, the bears have to resume their downside move as we enter that 95 mid 90 region on the S&P. If we actually start accepting this, right, you're going to see that 4405 area, and then from there we'll decide, right, is there going to be some kind of sell potential? But the sellers have to come out at these mid 90s on the S&P 500 futures or the 05s. Otherwise, we accept into distributions higher, and it's Friday, right? We can potentially just start rallying into the end of the day. I don't necessarily think the bear side is over here, but they're really losing time. They're losing momentum, and they're losing sizing. So I'm going to watch that as the first move potentially looks like a sell into these areas, and then we'll go from there. So happy Friday. Have a good weekend, everyone. We'll do this again on Monday. Thank you guys for showing out, and check out community.tradeproacademy.com for our free Discord, and I'll see you guys in and around. So thank you. Take care. Have a good weekend, and we're going to open up our live trading room now where we will trade these futures markets. So thank you, everyone. Take care. So that like 6 times.